All right, it's Friday. Guess what time it is? Another partner podcast.
Fun times on quarantine, sitting in our offices, drinking our own coffee and trying to stay connected.
Yeah, not wearing masks in our own offices here.
Exactly. Got Father's Day this weekend.
Yes.
That'll be fun.
Hopefully my kids will remember. I got my dad, moved down. So it's like the first time in 30 years, basically, that I've had to figure out what to do for my father on Father's Day.
That's fun.
Yeah.
Well, a couple things I thought interesting. We talked at our weekly staff meeting on Tuesday about this new requirement starting next year for partnerships to report tax basis capital accounts. So I think this is going to be an interesting thing for taxpayers to deal with next year. It could be a big project for people to go back and figure out how the partners in partnerships acquired their interests in partnerships and what kind of adjustments need to be made to account for that. And we're still unclear what the requirements are going to be for how to even report that.
Yeah.
So I guess the only thing to discuss at this point is I know that as we talked about it, we're unclear about, do they mean that we actually reflect each partner's actual basis in the partnership? Or are they going to require that the partnership convert and reflect the tax method of accounting?
Yeah.
As opposed to just whatever book method the partnership uses for their tax return. So I don't know. Bottom line is over the next few months, we're going to have to get some clarity on this and start reaching out to clients to figure out how to deal with this next year.
I looked at this a little bit, after our meeting, and there actually is a revenue ruling that just came out, I saw, and it's going to allow you to calculate your tax basis based upon two different methods, it sounded like. I should look at it further, obviously, but so there is like two specific, you can elect one or elect the other way to report your tax basis capital account. So they are starting to get a little more specific, I guess, on how you can or cannot do it. It can't just be GAAP, it can't be 704B, and it can't be tax basis. So I think that capital account section, at least when I was reading, I thought is going to have to be converted to cash or to tax basis, I think.
So far, my opinion is they ought to have a separate schedule to track tax basis like you do for S corps. So
yeah, I mean, that would make sense. And then it would be so much easier, I think, too. I mean, because you're really talking about the main difference between, your inside basis and your outside basis of the capital accounts is always if there's been a change of partnership interests, somebody bought out somebody died, inherited property, those would be the main ways you would get this inside outside basis difference.
Yeah. Well, I think, we're just going to have to, put our reading glasses on and read the stuff and figure it out over the next couple months, start communicating to our clients and be ready to comply with that next year.
Yeah, and I think that they're going to have to either, from what I have read and studied in my class too, they'll have to either recreate those tax basis capital accounts, or there is a safe harbor, which basically kind of just says we assume that that there hasn't been any changes, and you can kind of rely on like the M2 schedules, I think, or something to back into your partnership tax capital account.
Yeah. Well, what we're going to have to figure out is if you do have to adjust capital accounts, what's the balance sheet impact of that?
Right. Yeah,
there's going to be some clients that are used to doing things a certain way are going to have to start getting used to the idea of changing the way their books look.
Yeah, on the returns.
Yeah.
And it could be that, as you said the other day, you may have a client that's going to report their financials in one way, and then the balance sheet on the tax return is going to be totally different. They're not going to be the same because of that requirement.
Yeah. Yeah. Good stuff.
Yeah. You want to talk about QuickBooks?
Sure. Yeah, I think QuickBooks Online is this thing that I've gotten a lot of exposure to this year, and I know that a lot of clients have hated switching to QuickBooks Online from the QuickBooks desktop version because it's so different.
Yeah.
But I've just have found that the more I've used it, the more I understand how to get around. I've really seen the advantage of the online access.
Yep. Yeah. I think, 15 years ago, I mean, software as a service, and QuickBooks specifically, it was super lame, right? We couldn't even get a general ledger. You couldn't get good reports out of it. And now it's like so much better, and everything links to it as well. So if you've got like another outside software that you use to track donations, like if you're a nonprofit, you can get those automatically imported into QuickBooks so easily. The payroll downloads directly like into QuickBooks as well. I mean, there's so many really cool advantages to the online, and the reporting is so much better now.
Yeah, that's what I was going to say. Is I've had some success in linking it up to ADP directly, linking it up to banks, linking it up to a couple of credit cards, and the process has changed for bookkeeping from entering transactions and then once a month reconciling to the statements from the banks to download, having the transactions downloaded automatically and then looking them over before you accept them into your books. At that point, that things are tying out to the bank. You've had a chance to look them over. And the bookkeeping process has become a much more of a kind of a fluid on the fly process.
Yeah. I was just going to say, I mean, have you used the app at all?
Yeah, I have. Yeah.
I think the app is pretty great now. I mean, you've got like reports that you can get. You can snap receipts and link them.
Yeah.
I think that it's finally like pretty usable that you can actually do stuff with.
Yeah, it's coming of age finally.
Yeah. Yeah.
And this year I've had a lot of clients, and I've had it in the past few years too, but this year especially, a lot of clients provide me access to their online QuickBooks, and it has made the process of helping them prepare financial statements and do tax work, it's been such a great experience.
And it doesn't cost them another user. I don't know if people know that or not, but you can actually include your CPA as a specific user, and it doesn't use up any of your licenses. So that's pretty cool too. Yeah. So just one other thing I guess that I found that works well is an organization called TechSoup. Have you heard of them?
No.
So TechSoup is a nonprofit technology resource group. And so if you're a nonprofit, you can gain access to all kinds of software, technology, maybe I think even computer equipment, like at a fraction of the cost of what it would be normally. So like with Up and Running Again, we were able to get licenses for like Microsoft for like really inexpensive monthly fee, and then access to QuickBooks as well. I think instead of like a normal, $40 a month, nonprofits can like get access to QuickBooks Online for $100 a year. So it's a good thing. If you're a nonprofit organization, take a look at TechSoup. That's for sure. Good.
Yeah. Good deal. Anything else?
Nope. That's all I got.
Another week. I think these quarantine weeks, whatever you want to call them, these work from home weeks.
Yeah.
They seem to fly by for me.
It's crazy that we're in June. We're like in the middle of, we're beyond the middle of June. I mean, it's like time stood still, like once we went into quarantine almost.
Yeah.
Oh well.
All
Happy
right.
Father's Day, Paul.
Yeah. You too, Steve.
All right.